Alright, hello guys, and glad to have you on board again today. We're going to do some kind of a data digging analysis today, so no face cam needed, but data straightforward. Okay, what we're going to look at is a deep study digging below the surface of the iceberg into GlassNode. This is one thing that you probably already have heard of, or if you did not, well, this is where we're going to get the best on-chain data. Of course, GlassNode is a paid stuff, which means if you really want to get the essence out of it, you're going to have to pay. So, lucky you, I am there and I'm going to make this study for you guys and let you know, as usual, when I have something valuable. So today is going to be looking at two data stuff. Okay, this is like the most commonly watched stuff, so we're gonna just scratch the surface here. Okay, so digging the surface regarding what people are talking about, just prices. We're going to look at the underlying structures of prices. Where are we in the bull market? Is there still some room to go to the upside? What are the probabilities? Of course, because we don't know anything about the future, we're just going to try looking at the dynamic supporting prices now and to see if we have similarities from the past. Also remember that the market never copy-pastes itself, it always rhymes, okay? It's more like music rather than forecasting the future magically. No one has such a magical tool, and certainly neither do I. Okay, so now that the warnings have been said, let's jump right into the real deal. Okay, what we're going to look at first is the percentage supply in profits. So what this indicator is basically is that a GlassNode is looking at each and every wallet in the Bitcoin blockchain and is looking at the prices in which the coin is entered. Okay, and then they look at what the prices are today and if the account has a positive balance or a negative balance in fiat regarding the entry price of the coins. Okay, so this is really not that complicated. It's just that there are so many accounts out there that it turns out to be kind of big data. So they're analyzing all of it and putting it into a chart telling us regarding all of the balances available out there. Here's what we get on a percentage based of all available accounts. We look at those who make money and those who lose money regarding their entry prices at each and every given time. And that's, once again, not the real-time data that cares and matters, but the structure, the dynamic, and all of these things. Okay, so this is no more than just yet another indicator, just like you wouldn't be a good trader looking at the RSI. I mean, so many people tried over years to predict the market with RSI, all always failed. Just like if you just trade that blindly, you would fail as well. Okay, it always is more complicated than that. But that can still provide some information. Trading anyhow and anyway can only be done through a consistent strategy, of course. Okay, so this will help us figuring out interesting timings to shape ideas, but certainly not replacing an existing strategy. Okay, more importantly, just like in every strategy that actually worth it, mine included, there will never be a single source of information. This would be the equivalent of a signal to me. Okay, it looks like an oscillator. That would be an RSI-like type of stuff. Anyway, it's bounded because we can no longer, we cannot expect going beyond any such a thing as 100% or below 0%. So this is an oscillator, okay? That would be an RSI-like type of stuff. You never trade the RSI alone. There's always going to be something else. So today we're going to look at two indicators. This one's the first one, and the second one's coming afterwards. The two indicators must not be correlated, which means the data processed must not be from the same type of sources. All right, now that all of the necessary warnings have been said, let's jump right into it. Okay, what I do first when I look at a new indicator or something that I don't know anything about, before jumping right into the details, I need to have a look at the broader picture. Is anything in here standing out of the ordinary? Basically, is there some cyclicity? Well, in here, generally what I do is that I close a little bit of my eyes to figure out if there's cyclicity. Well, in here, it doesn't even need to be done. It's clearly and simple. We can see that there's underlying price structure. So, okay, let's stop the analysis right here, right now. We can predict the future. That's great. There's a cyclicity. Oh boy, that's approximately 5-year cyclicity. Oh, that should be due to something you know. Halvings. So what we can see in here at the first glimpse is that halvings do alter speculation, because this would be, in my personal reading of what this is, okay, a measurement of speculation. When everyone's making money, everyone is making gains in the market, that means, well, the market's going up, of course, and most importantly, that means everyone is able to forecast the future, which never lasts very long. And of course, when we go below 50%, which the indicator decided to be the limit level for supposedly buyable areas, makes no sense, of course, because if you bought right in here, you would have lost quite some money before turning positive again. But anyhow and anyway, okay, these things are not buyable areas. They're just indications, and what matters is the dynamic. All right, so this is the area in which people speculate and know the future. We're all making gains. This is the future, bro. We're all going to get Lambos. This is generally in points in which the market is nearly going to top. But as you can see, we don't top when we enter this area. We lost there for a limited amount of time, and we'll study this afterwards. When we get to the bottom area, everyone's losing money, end of the story, bear market, crash, whatever. Okay, so what this thing tells us is that we're supposedly heading into another crash around 2022 or something. If we stop the analysis out there, okay, see you guys later. We're just all going to lose money. I'm sorry to say it, but that's simply not going to work for a simple reason, okay? We need to dig below the surface. We need to make quantitative analysis out there. Is this cycle going to persist over time, and what's causing it? We know what this is, okay? Halving is basically we cut by half, okay, the supply each and every 4 years, okay? We divide by 2. Oh, sorry, let's not divide, okay? So we divide by 2 each and every 4 years. So that's great, but that also means that the scale is a log, okay? Which means that as we divide it by 2, the effect of halving over time will dissipate. We know that for sure. It's no big deal. Just like on the opposite end, we also know that we're in a cycle of adoption. This would be supply-driven mechanic, which is going to reduce over time its impact over price and therefore speculation. And on the other hand, we've got demand, which is rising on the opposite shape, because in here you know that adoption curves are parabolic. The first 1% takes as long as to get there, to get from 1% to 10%, and then from 10% to get to 100% people using this. So adoption's parabolic. And of course, in here, supply limitation is going to be inverse parabolic. So there is going to be a point in time in which demand, those demand-driven perspective, will overcome supply-driven mechanics. So this is the good old days, supply-driven mechanics. And today we can see that, oh boy, it looks like there is some shitty stuff going on, okay? So this is where I think we're nearing the distortions of the crossover, the moment in which we're likely going to get a demand-driven market. Therefore, that's the reason why I'm carefully going to pay attention to this indicator, because it's mostly driven orientated, okay? People speculating, and we'll see if they are profiting or losing money. That will give us the underlying cycle. We know that historically speaking, this has been driven mostly by supply. Today is no longer the case. We can see that lots of things have changed. And now we're going to dig into the cycles themselves to see what nature they were and how we can profit and take over information from what happened in the past, find similarities and nothing such a thing as a copy-paste, and to look at different perspective and put down some hypothesis on what could be at play. So let's study the bull markets first. We're going to look at these, okay, and then we'll look at the bear markets and compare them. So the first bull market in here has been done by sets of waves. Okay, we can see that this is clearly another cyclical market. Okay, supply, demand. The demand is oscillating quite predictably at some point. We can see that there has been 4 phases to reach out to the market top before we've gone lower. We can see that it has been 2 phases to go before the all-time highs, and then the 2 speculative phases above the previous all-time highs of the previous cycles are the ones that succeed, bringing a lot of gains. This is where everyone's making money, boys. 100% of profitable accounts. Of course, markets are predictable at that point. Everyone is going to be rich. Lambo stuff, you know the drill. Of course, at some point, speculation collapses on itself and we rapidly retrace. We're certainly not going any such a thing as a bear market territory. We just retrace to something that's pretty much, exactly what we've experienced recently. That's the first thing we're going to notice. Then, as we can see, after a first massive bump breaking to all-time highs, comes this hesitation phase and a second final wave. What we can study is that this one goes pretty much in two sets of waves, okay, and that this one lasts less longer than the first one, okay? This one is shorter, so we spend quite a lot of time over speculating, everyone's going to be a billionaire, and you see that this one is pretty much half as long as the first one. So that's an information that we can take. If the current cycle has the same underlying structure, we're going to profit from that information. Okay, the second one is that in here we can see that the structure has been, well, significantly the same in the first place, two sets of waves before we actually reach out to all-time high, and then, oh boy, there's absolutely no structure. There is not the two sets of waves. In here we go immediately into over-speculation and all of these things. Everyone's a billionaire. There is a little bit of downside returns in which a lot of people might be changing their minds, but still we remain far above 80% of money-making stuff. Billionaires, Lambo stuff, we're all going to be in the brightest futures of cryptocurrencies. Of course, this cycle being totally different than the first one, there is not going to be any outflow warning in here. The market goes from bullish to bearish. Absolutely painful for those who were in there. This has been purely a demand-driven cycle. And we can see in here that the demand has been at some point collapsing all on itself, and here comes the same old cyclicity, the one that drove us to buy the dips back then, that we knew that few months from now we'll get the next halving and so on, so we started anticipating. But as you can see, oh boy, lots of anticipation in here. We certainly weren't playing the same game as before. We immediately rushed to some lots of coins being in the gains. That's been causing what? Yet another drop back into losses thanks to COVID. As usual, nothing is ever going to be predictable. We thought that the halving will give us the gains we were expecting because, of course, last time it worked almost perfectly, so it was going to work out this time as well. I so goddamn remember everyone selling their coins in the COVIDs because, oh, they were surprised. We thought we knew the future. Oh, what the hell's going on? COVID's going to change the world. Maybe I was wrong. Maybe I should sell my coins with losses. Oh boy. Okay. Absolutely stupid stuff. Like I said, don't follow speculation. Learn about speculation to understand the underlying price structure we're likely going to get over with, okay? So this would be our first cycle anyway. Back then we were even to all-time high. So this is our first cycle. As you can see, oh boy, it's much longer than the ones we've experienced back then. So it looks like time has dilated. Got time dilation. Okay, so this is first element, the first underlying cycle that has brought us till the second one has brought to all-time highs. Okay, so the structure isn't nearly the same now. Okay, we definitely do not have the same structure. I would say COVID has been kind of a blower in here. It blew everything up, but the structure is definitely not compared to the other ones. So we can see that something has changed, and that will support the fact that I told you about earlier. The schematic has changed. It's no longer the same party that is at play. Things have changed, and those who think that we're going to copy-paste this cycle might very well be proven wrong. Okay, so that's a first good thing, because remember, otherwise we're heading into bear market now. So COVID might be just a problem in the structure, but anyhow and anyway, the first wave was much longer than the previous one. Time dilation. Okay, then we go for a second wave. What do we see in here? Yeah, there's kind of something that barely looks like a mix of this and this. Okay, oh sorry, this and this, because there is hella lot of gainers, but there is volatility a bit. Okay, it's not we're making staggering gains, parabolic shit. Okay, so there is mid downturns in the meantime. Okay, but certainly nothing as speculative as back then. We somehow remained above 90%. Where back then we were oscillating across 180%. Okay, so different structure in here. Feels like we had more confidence, but the confidence collapsed all on itself much sooner than back then. It's pretty much half as long as this one. So have we reached out the over speculative phase that collapsed it all on itself? I would doubt that information because it simply doesn't corroborate. We cannot copy paste what happened back then. Did we have some over speculation? Yes, we did. Where have we gone down to? As we see, in pretty much the same thing as this one. So we definitely have a mix of what happened back then. we can see that this is not like it was from a crash in which we go from bullish to bearish without even pullbacking or going cycle. It's really up to down. We're not doing this. We're oscillating today, so we'll see. Now is an interesting story. Are we going to go for this thing, in which, as we can see, we have a little bit of an other attempt in which people are making losses? Looks like an accident or something. Well, what could this be? Looks like pretty much the same thing to me. Okay, so then what the market does, of course, going back to everyone's making gain because we go all-time highs, and we go for a second limited time offer that's pretty much lasting half the first cycle. Well, so if the story repeats itself, and if we're going for something in between this and this, that tells me one thing, that we're very likely going to go back all-time highs rather than the opposite. And then we'll see, either we're going to go for such a thing, over speculation that's going to last long, and of course we're going to go to bear market territory in a straight line afterwards, or we're going to build our things. We're going to go in here because this looks pretty much like a momentum divergence, okay? We go bullish, then we hesitate, and we go bullish again, but with less confidence, and then triggers the market reversal. But the market reversals look like it has a structure, 2 sets of waves to the downside. Well, that goddamn looks like a structure I know, the speculative underlying structures of market. So I've got a lot of information for you folks. This doesn't tell me that the market will go from bullish to bearish. It's not enough speculation, but it is not nothing either. Something has changed, and I can tell that just by looking at that data. What happened in the past is not going to replicate, but we're very likely going to have something like that, but dilated over time. There's a time dilation. So this cycle is going to last longer, mostly because I think supply is not driving the prices anymore. It's more heading into demand, and as the cycle adoption is getting in, it's going to distort our halving perspectives. Everyone's likely going to talk about the next halving and so on. I won't, because I know it's not going to be the new driver. I'm mostly caring about the demand, and the demand hasn't gone skyrocketing already. It's gone up, yes, okay, but it's mostly going to be something like that. What I know is that it's going to be more volatile than it was back then. Don't expect such a linear gains and so on, okay? It's going to be something like when it was before. So lots of accidents. Remember, we had 40% drawdowns back then, so it's going to be volatile. I don't think it's going to be 40% like, because look at this. It's mostly going to be something like 30% drops. So there's going to be some pullbacks in the bull run. Don't think it's going to be a straight line, but we're very likely going to have something, I think, that's going to last half what we've seen today. This thing in here has been lasting for approximately 2 quarters. So I expect that we'll get something approximately lasting 1 quarter when we'll retrace to all-time highs. What I expect as well is that it's not going to be an easy task to navigate, because we're probably going to have a few ups and downs. But what I know now is that we're supposedly going to go back all-time high. When we succeed breaking all-time highs, it's pretty much going to last approximately a quarter. And then the risk phase will show up, which means we'll get into uncharted territory. But I know something now. When we'll retrace all-time high, if we do, I'm going to pay attention to how long it's going to last. And when we reach out an approximately 3-month schedule, I'll start looking at reversal signals. That doesn't mean I will reverse. That means I will have a look at, okay? And of course, I'll track that data. But as of right now, I just put it a single alert. I want to know when we make more than 90% gains. That will tell me one thing, that the bull run is restored and that the clock is going to start ticking. That's the first chart we'll look at. Of course, like I said, I'm not going to look at a single indicator. And we need to look at something that has no correlated inputs. So as we looked at a speculative measurement derivative, okay, looking at how much gains and losses are spread into different accounts, in here we're going to look at how weighted the accounts that drive price actions are. Okay, what it is in here is that basically the greener means the longer terms are holding a portion of the supply, okay? So in this perspective in here, let's just take that example. When we were breaking to all-time highs, or something similar, when the bull run started to get speculative, okay, we can see that in here, for example, if we take anything like is above 2-year holding, okay, assuming that the people who bought the low points have bought in 2015, 16, okay, there must be in gain, when we break all-time highs, there must be holding the coins for at least 1 to 2 years, okay? So that would be 6% plus 8% plus 14%. So we can see in here that when we break to all-time highs, there is a significant portion of the supply that is held by people who likely bought the dip, which means these guys who are in yellow or mostly in green represents hodlers. And then we know what the hodlers are doing. As prices increase, okay, more people buy the remaining coins, so their respective portions of the supply is distributed, because of course they take a little bit of the profits, but most importantly the other ones are buying everything circulating, okay? Those who have the supply are distributing it to those who want it. Most of those who get in the market are therefore short-term because they just got in. So the redder we go in here in terms of shades or gradients means these are the newcomers. So where do the newcomers go? They mostly go when the market breaks all-time highs, okay? So what do we see in here? Is it a similar pattern? Okay. Whoa boy, we can see that the hodlers are serious in here. That's just a little bit less serious than the ones that we had back in 2015. Okay, so more of a diluted market cap, which is great. That means adoption is going on in here. The demand is not the same because, of course, the coins are more diluted. There are less whales because the supply is more distributed across the board. Okay, we can see that short-term hodlers had, short-term holders, short-term wallets had more coins available. We're looking at those who are holding for 1 month to 3 months, okay? So they're going to buy some dips, sell the rip, and so on. They're arbitraging the market, but they're not holding much longer than that. So we can see that the distribution in here, of course, comes that there is a much more newcomers to this market than old ones. Distribution is getting better. Okay, now what else do we see out there? Okay, as we move on, of course, breaking all-time highs means the first set of speculator comes in, and then, oh boy, we've got something like a pullback. So the pullback is so violent in here. Do you think it looks like the ones we had back then? No, over-speculation fueled itself on its own. As you can see, as time passed, the speculators, the short-term gamblers, the newcomers who were there for the revolution because they heard that their neighbors had just bought some Bitcoin, so maybe the other neighbor afterwards will buy as well, so maybe I should buy now. You know the drill. Everyone's getting in because they think someone's going to be dumber than them later on. Of course, as it peaks to some kind of maximum, everything collapses all on itself. Okay, when too much supply is held by short-term traders who are buying and selling one day after another, the market simply has no value anymore. It destroys itself. The supply is diluted again to those who are buying the goddamn dips. So think of it as the green curve only occurs over time because these takes 2 years to ripple through prices. So those who bought the lows in 2018 and 2019 are the ones you see in here. This curve is rising because these are the guys who bought the lows. And then what comes in as we break to all-time highs? Same old things. They dilute the market cap, selling to those who want to be in. So we know one thing now. Either we already made the market top and we're on the verge to bear market, but that simply doesn't look like it's going to be the case to me for multiple reasons, okay? We've got in here an ascending short-term demand. So you can see the spikes are going higher, where in our case the spikes are going lower and the top has been done in here, not on the price market top. And then we've seen this accumulation phase or distribution phase follow the accumulation phase. So this schematic isn't at play. We're definitely not into the same market context. Like we stated, we probably have something that is a mix of these two. So because it looks definitely like we have something like that, but it's on a reverse scale. Just like this one has 2 spikes. We've seen the first speculative thing, the speculative collapse, and then the second burst of energy that leads us to the market top, where of course we see a bit of hodlers holding the coins and finally releasing them as the second wave comes in. This is exactly what we see now. Look at the long-term hodlers. They have been diluting a portion of their coins, but look at these guys, the one that have been holding for 5 to 7 years. They haven't sold a damn thing so far. 5 to 7 years are the ones who bought in 2015. These guys, they are not selling the rip. They're holding the shit. And that means one thing to me. If these guys are still holding, they've known 2 bull markets. They are not the short-term gamblers. They are the long-term hodlers, those who have the money and the knowledge. And therefore, if they don't sell, neither will I. Okay, I think they're expecting another bull run, and like we stated, this one has lasted much longer than the first one, so I expect a minimum 3-month bull run to restore bull trends over all-time highs, and then the risks will start rising. But that doesn't mean I will cut off the trades out of 3 months bull run. That means I will carefully start looking at this metric when 3 months starts to count down. Okay, I'll look at how diluted the market cap is, and when we'll reach out to a point in which the short-term gamblers will take over more than what they have today, when they will be more than 25% of the market participation, I'll sell the fucking shit. Okay, that doesn't mean I'm going to get entirely out. That means I will profit take at least to reduce the gains, to suffer and potential another withdrawal syndrome, so that the distribution will shift again. Okay, so what we have today looks a lot more than a mix between what we've seen in 2018, but definitely not the same structure, just like something that has been happening in 2013, kind of a double cycle at once. The second one being a bit less speculative than this one in terms of real short-term traders. You can see the spikes in here are a little bit shorter, okay, but in terms of anyone who's holding for less than 3 months, we have pretty much similar spikes. Okay, so I expect something in here to go over this as well, kind of 50% of the supply held by less than 3-month-old accounts. When we get something similar at some point, that will be the red flag for me. Okay, so we've got everything. We've got a plan. We've seen that the supply-driven, the demand-driven side should give us approximately a minimum 3-month stuff. That's what we get from the replicated pattern mix between the two. We can see that this mix is also visible on the distribution side of the market, and that we have some kind of a correlation between two things that have absolutely no apparent correlation type of structure from the data. We have distribution on one side and demand on the other. These two indicators tend to say the same story. That's what I like, and that's what I hope you guys will learn from today's video. Are we on the verge for a bear market? Well, the on-chain data suggests we are not. That doesn't mean that we're not going to get a few accidents in between, and that also tells me that we will get some other 30% drops on the next bull run. That also tells me that it will last approximately 3 months at least, and that I will wait for the distribution to reach a peak before getting the hell out. I will likely not take my entire profits, but probably more than half of it, and then let the market dilute itself again, and I'll adjust accordingly. When the dilution will be smart enough once again, I'll get the hell in again. Most importantly, if I see the long-term hodlers in here, the darker green ones, not selling at the next market top, that means I won't as well. Or I will take partial profit taking like 25, 30%, but I'll stay in. As long as these guys are in, so will I. That being said, that's more than enough for today. 28-minute long video. I hope you've learned something valuable. Don't forget to like, you know the drill. That's helping people spread the knowledge. And finally, I generally don't do this, but it takes a freaking long time to me to make the videos in both French and English. And I couldn't hardly notice, but the fact that I have much more views in the French community. Though, of course, I'm making no commercial stuff. I'm not paying to promote the videos in YouTube or anywhere else. So you guys are my user base, and you are the ones spreading it. So I said a like is the least you could do if you like the video. Sharing it to some of your friends or whatever would be definitely helpful. I hate being on the clickbait stuff. So please do the job for me. If you like the content, spread it all over. That will definitely help me. That the more people look at my stuff, the better it is for me. I'm just spreading the knowledge for free. So of course, the more people listening to me, the happier I will be. Bye guys.